January 7th, 2026, and welcome back to the Global Financial Reset Surviving and Thriving the Transition. And joining me today in just a moment are my guests, Will Barney and Bill Armour, the Will and Bill Hour. The following is provided by Guardian Daniel R. I'd like to sort of set the tone before we begin. They prepared you for collapse so you'd miss the rebirth. They taught you to fear one word above all others. That word, collapse. They showed you images of chaos, hunger, riots, and despair. They trained your nervous system to associate the fall of the system with your own destruction. That was not an accident. It was conditioning. Because if you ever realized what collapse really means, you would stop complying overnight. A system does not collapse unless it is already rotten. Empires do not fall unless they are hollow. And currencies do not die unless they were never real to begin with. What is coming is not the end of stability, it is the end of an illusion that required your obedience to survive. Look closely at how things are breaking. Banks freezing accounts, payment rails stuttering, governments printing money that buys less and less each month, digital systems failing more often, not less. This is not mismanagement, it is exposure. The scaffolding, if you will, is being removed so you can finally see the structure underneath. And there is nothing, absolutely nothing there. They needed you distracted by survival so you wouldn't notice the transition. They needed you arguing over politics and borders and culture while the old financial architecture quietly decayed. They needed you exhausted, divided, and afraid because a calm population would start asking all the wrong questions. Questions like why money is created as debt, why interest exists on something created from nothing, why your labor, your life's energy, never seems to catch up, no matter how hard you work. Why the rules only apply to you? Here's what they never planned for. Awareness spreads faster than control. Once you understand that the system only functioned because you believed in it, the spell breaks. Once enough people withdraw their belief and compliance, once we the people withdraw our belief, compliance evaporates, not through violence, through refusal, through non-participation, through clarity. This is why they rush new digital frameworks. This is why they talk about control, monitoring, compliance, and emergency powers. They are not building the future. They are desperately trying to replace a dying past. But you cannot patch a lie forever. What comes after the collapse is not chaos by default. Chaos only exists when people cling to what is already dead. For those who see clearly, collapse is simply a doorway. On one side, a lifetime of artificial scarcity. On the other, a system designed for human life, not extraction. And this is where the truth they buried comes back to the surface. Nasara Gassara, some might say, we've never heard the president use these terms, at least I haven't, unless it was AI generated. But much of Nasara Gassara, one could say, is in part been built into the Big Beautiful Bill. But Nasara Gassara is not a fantasy. It is the corrective mechanism to a criminal financial era, a new legal and economic framework built to dismantle debt-based money, dissolve central banking control, and return sovereignty to we the people. No interest slavery, no private banks dictating survival, no endless loans designed to keep you chasing. Under this system, debt is erased because it was never legitimate. Wealth is restored because it was stolen. Money is asset-backed, transparent, and finite. The economy serves real production, real labor, real life, not speculation, not manipulation, not digital numbers owned by institutions that never created any value whatsoever. This is not about saving the old world, it's about replacing it. You are not watching the world end, you are watching a false world lose its grip. So when the noise increases, be calm, stay still. When the fear campaigns ramp up, breathe. When they tell you everything is falling apart, remember this: only cages collapse. Truth does not, and neither do you. This was never about surviving their system. It was about stepping into a new one. And so it's time to Goots. What is Goots? It's an acronym: Get Out of the System. The orchestrated collapse of the US and global market crash of 2008 2009 is when I first began working within the Goots model. It worked then, and it's working today. Bill Armour and I are working with a lot of folks that reach out to us from this very program and through our JMC Broadcasting Network. The Goots model is a simple yet powerful and effective tool to reduce risk, maintain a balance of liquidity, and addresses growth, inflation, and income-producing assets for those who are looking for income. Time to get out of the system. The railroad, the train is coming. So you get off the track for a little while, and you come back in when the transition is through. So visit wealthcoachuniversity.com and check out module number 2, the Goots module. It is one of 10 free modules laying the foundation and groundwork. It serves at this time in history as an essential series of steps to help you not only survive, but thrive the transition of this global financial reset. And that brings us to our first guest, Will Barney. Will brings over 19 years of experience in the banking sector, where he has developed a strong specialization in structuring funding for commercial projects on a global scale. You can learn more about Will by visiting jmcbroadcasting.com. And on the upper left at the nav bar, you just click on contributors. You'll see the various military, intelligence, and economic experts that are contributors to this very platform. And you can read about Will's extended bio and a link up to Will's site there, enochgs.com. Welcome back, Will Barney.
Hello, John. How are you? Good to be with you.
I'm good to see you. Happy New Year, and it's going to be an incredible New Year. It got off to a big bang and boom in Venezuela, which we're going to talk about some of the economic impacts of that because there's so many angles to that. But we'll focus on the economic aspect in just a moment. Will, what I'd like to do, just to kick this off, and I'm going to put a little disclaimer here so I don't ruffle the feathers of folks out there. I'm going to run a clip that dates back a few weeks, around the period of time of Christmas. This has come to be known as the AI guy, the Asian AI guy, that has been putting out a lot of content, a couple of 3 a day, in real time, laying down what, at least in that narrative, what is happening behind the scenes. Now, some of the folks out there are saying, well, maybe it's a bait and switch, maybe it's being deployed by China. Maybe some of the information is not correct. You know what, folks? I'm not following it religiously. I saw a couple of clips, and I stand by every single word I heard in the clips. And I'm going to run that clip right now, and Will and I are going to break it down. What we're witnessing really is the self-destruction of the central bank and the explosive growth in precious metals, particularly silver. Let's run that clip.
The banking system is insolvent. We just received the official data from the Federal Reserve Bank of New York regarding their overnight reverse repurchase agreements, the repo facility, for this morning, Friday, December 26th. And the number that just flashed across the terminal is not a typo. It is not an error. It is a confession. $17,251 million. In a single morning, in the quiet hours just after the Christmas holiday, the too big to fail banks tapped the Federal Reserve's emergency liquidity window for over $17 billion in cash. Now, you need to understand what this means. You need to understand what the repo market actually is. This is not the window where healthy banks go to get a loan to expand their business. This is not where you go to get capital for a new project. The repo facility is the pawn shop of the last resort. It is the emergency room for a heart attack. If you are a healthy bank with a balanced book, you do not touch the repo facility. You trade in the interbank market. You borrow from your peers. It is a badge of honor to avoid the Fed's window because going there is a signal of weakness. It is the walk of shame of the banking world. So, why would the masters of the universe, the entities that supposedly control the global economy, need $17 billion in cash at 8 o'clock a.m. on the day after Christmas? Is it for payroll? No. Is it for operational expenses? No. They need it because they are bleeding to death. They need it because they just received the biggest margin call in the history of the commodities markets. Connect the dots. Look at the timing. It is impeccable. Yesterday, silver gapped up. Overnight, it teleported to $77. The banks are sitting on short positions that number in the hundreds of millions of ounces. They sold those contracts at $30. They sold them at $50. They sold them at $70, thinking they could tamp it down like they always do. They thought they could spook the retail investors, trigger the stops, and buy it back cheaper. But the retail investors didn't sell. The Chinese industrial buyers didn't sell. The vaults were empty. The price didn't go down, it went vertical. And right now, silver is trading at $77.16. Do the math. Every single dollar that silver rises creates billions of dollars in losses on their books. But there is a difference between unrealized losses and a margin call. For months, the banks have been hiding these losses. They mark them as unrealized. They pretend that the price will come back down, so they don't have to acknowledge the hole in their balance sheet. They kick the can down the road. But the COMEX clearinghouse doesn't care about your accounting tricks. The exchange doesn't care if you think the price will go down next week. The exchange cares about solvency right now. When the price moves $5 against you in 24 hours, the clearinghouse computer spits out a number. It says, "You're underwater. Post the cash to cover the risk, or we liquidate your position." This morning, that computer spat out a number, and that number was evidently $17 billion. The clearinghouse called the banks and said, "Pay up." And the banks looked at their ledgers, looked at their liquid cash reserves, and realized the terrifying truth. They didn't have it. They are illiquid. They are insolvent on a mark-to-market basis. So they had no choice. They gathered up their U.S. Treasury bonds, the only collateral they have left, and they ran to the Federal Reserve. They pawned their treasuries for overnight cash just to keep the lights on, just to prevent the clearinghouse from forcibly closing their short positions and sending the price of silver to $200 instantly. This $17 billion is not a stimulus check. It is a tourniquet. It is a desperate attempt to stop the bleeding before the patient dies on the table. And think about the day. It's Friday. In the banking world, bad news is always buried on a Friday. Banks fail on Fridays. Regulators seize assets on Fridays. The fact that this liquidity spike happened on the Friday after Christmas, when nobody was supposed to be watching, tells you everything you need to know about the severity of the crisis.
Well, there you have it. Would you concur, Will, with this analysis, the structural analysis of what's going on behind the scenes? What's your take on that clip?
Well, there's numerous things that led up to that. As early as the 23rd, so a few days before Christmas, you had 847 tons of silver leave Venezuela for China and Russia. That is not a small amount of silver. Everyone expected those inventories to stay in Venezuela and to stay as part of the inventory count. When that left, that caused a major disruption. Now everybody's going to wait. How much is actually sitting in reserves? We don't know. And then you have the margin call the day after Christmas. This is a serious situation because these banks are actually playing both ends. So what they do is on one side, they're shorting the market. On the other side, they're trying to play the long game by playing with the minor stocks and everything else on the upside, hoping that worst case scenario, they balance the books. But that isn't what happened the day after Christmas. They couldn't balance those books. And the margin was called and they had to pay up. So what do? They have to go to the Fed to borrow the money. So 17 billion is a lot of money. It's a lot of money, okay, to suddenly come up with and try to bring that cash. So what's the bigger story here is what is the inventory of available silver? Because even though they're playing paper games with various contracts and they're playing shorts and longs, the reality is there enough physical silver to provide delivery? And that is the big question that everybody's asking. You know, there was 4,600 contracts called in this first week of January already. That's over 30 million ounces being called for delivery. And the COMEX has a certain amount of reserves, somewhere around 33 million ounces, which is about 2 months of global supply, let's say. But if all
Wow.
that's called in the first week of January, what's going to happen the remaining 3 weeks of January and into February and March, when a lot of the future contracts come due? How are they going to then deliver that? So there was some big stuff that went down in the lead up to Christmas and then shortly after Christmas. And that was amplified on January 3rd when we find out the United States has moved against Maduro and has seized the assets of Venezuela. So that's creating all kinds of panic, but it's first started on the 23rd. So right before Christmas, when all that inventory leaves Venezuela, and then all the mines shut down. The mining operations actually shut down that same day. Did they know the U.S. was going to make a move within a week to seize assets? We don't know, but we know that 847 tons left the country, and now it's probably bolstering up the supply in Russia and China. I think that that's a very significant thing that's going on right now. And the bottom line is this: how do you support a fiat currency system, which we have in 180 plus nations across the world today, when there isn't enough supply of physical metals to back that? When market demands physical metal, it says it has no more confidence in fiat, because fiat is whatever you think it is. Now, if you take 17 billion and of currency, and let's say you try to cover some of these paper contracts, let's say that it gets to the worst case scenario when the contracts are called. And the worst case scenario is this: we've run into a force majeure moment. We can't cover the physical delivery, so we'll give you the cash equivalent based on the spot price. But the reality is, you and I know spot price isn't what you can buy silver for. I looked at the price today. If I want to buy an American Silver Eagle, it's going to cost me $92. Spot price says it's 77. Okay. But does anybody get spot price? I don't know anybody getting spot price. They're all having to pay a premium if they want to actually get the physical silver. You're going to have Bill on a little bit later. He'll probably comment on this a little bit. But it's really fascinating to watch this unfold. Whether you like the Asian guy, whether you like the details that he's giving, or whether you think he's complete full of it, the reality is the facts didn't change. He stated the facts of what was going on there leading up to Christmas and after. We saw the price spike all the way to $82 and then pull back. It's now at 77 and change. So it's actually lost $2 on the day versus yesterday. So we're down $2, and that's just a machinations of panic in the background. You know, if they can force enough contract sales, they can try to drive the price down. The problem is they can't keep it down very long. It's just not having any holding power because everybody's looking at inventory. If we've cleared out 30 million ounces of inventory and the COMEX is sitting on 33 to 35 million, that means we got 3 to 5 million ounces left. What does that mean? That means you have about 1 day's worth, okay, of reserves. There's a lot of time between now and the 90-day futures when those come due towards the end of March. What's going to happen then? Are we suddenly going to find more silver? Are the mines going to suddenly produce this massive quantity that we don't know they're producing? Because if you look at the mining charts, it says we're down 2% less production than we were a year ago. And for the last 5 years, the demand for silver has been eating into the reserves every year. In other words, the demand has been larger than the actual mining supply of silver for 5 years in a row. So it's like we're facing this tsunami of can you get physical delivery? Now, let's say that the worst case scenario happens, and I'm just going to throw something out there. They call a force majeure moment and they pay out the cash. Are you going to want to get, let's say $80 for an ounce of silver against your paper contract? Are you going to want that $80 when at that very moment between now and March, people getting physical silver is paying $200 to $300? You're going to feel like you got ripped, even if you did get your money back, right? You're going to feel like the market shorted you because it did, right? There wasn't physical delivery.
Mhm.
So the reality is you can only hide a physical delivery problem for so long, and you can only bury it under paper for so long. Right now, paper contracts are running 300 to 1. That is unheard of. Historically, go back 5 years, 30, 40 to 1, not 300.
Mm-hmm.
I mean,
Yeah.
it's insane what they're doing. It's absolutely insane. And at the end result, what's going to happen? China sitting on a massive quantity they just got from Venezuela. Russia sitting on a massive quantity they got from Venezuela. And nobody's talking about China producing 48 trillion of Chinese yuan to buy metals. It's not to put into the market. It's not to prop up their failing real estate development companies that are falling apart everywhere. No, the money is specifically set aside to buy every ounce of silver that comes on the market. What do they know that we don't know? They know we have a delivery problem. They know we have a physical
Yeah.
delivery problem. So it's coming. And I don't know if there's anything that fiat can do at this point to counteract reality.
Great analysis. Thank you. That at the time of that clip prior to Christmas or thereabouts, the number, as reported by AI Asian Guy, was 17 billion. About a week ago, that number was 51 billion. And based on the next 90 days, as you've alluded to, as contracts, future contracts come due, they're caught between the proverbial rock and a hard place. You have a good career behind you in banking. Do they have any other tricks left up their sleeve? Any other strategies,
They're running out.
manipulative moves?
Well, if you look at wealth management traditionally, most wealth managers would say, it's always good policy to hold 5%. If you're really worried, hold 10% of your wealth in metals. Okay.
Mm-hmm.
Yesterday, Bank of America came out and said their guys are all asking for 20%. They're moving portfolios
Catching up with
into silver and gold at 20%. What does that tell you? It tells you panic's already set in. Bank of America was one of the biggest offenders in terms of shorting silver for the last 5+ years. And now suddenly they're flipping and they're on the other side going, man, this thing could go to 300 an ounce. Yeah, it could go to 300 an ounce. What's going to happen 30 days from now if there's continues to be calls for physical delivery? And the problem is not a money problem. It's not like you could say, well, we can cover these contracts and just pay for it with cash. With Federal Reserve notes, we can just pay for this. That's great, but what do you do when companies like NVIDIA need silver to make a chip? Because they're powering AI. What do you do when solar panel companies need silver because they can't produce the next panel? These guys need physical product. There's an industrial appetite here that is just insatiable, okay, right now. And so I don't know how you suddenly come up with more when we are at mining production that's 2% lower than last year. So what's happening is all the reserves are being eaten up, and people that are actually sitting on the silver who have been smart enough to buy it and put it in a vault actually take physical delivery. You think they're ready to sell in this kind of market? Oh no, they're going to ride this thing because they're sitting on it and there's no way they're going to be getting out now. This is just the opening salvo of what's coming in terms of the financial system. And this really ties in with the BRICS nations. If anybody's been following the BRICS nations for the last 10 plus years, they've been declaring how the fiat US dollar has been beating them over the heads and they need an alternative. They want to trade with each other and they need an alternative, and they want that alternative to be asset backed. They want it to be gold backed. They want it to be silver backed. So what does this do? Well, when you have countries like China, Russia, Brazil, South Africa, you've got some major nations, India. These are, when you combine them together, you're talking about a pretty large portion of GDP. If they want to start trading with each other in an asset-backed currency, what's the future for fiat? It doesn't matter how much the Federal Reserve prints. You can't overcome the fact that nobody wants it. That's the problem we're facing. And so
Thank you.
a lot of people don't like BRICS. I'm not for or against BRICS. I'm just saying you have to see what they're doing, and you can't be ignorant of that fact, because we all have to maneuver ourselves to be in a place where we can survive the changes that are underway in front of us right now.
Absolutely. And to our viewers, I'm going to touch on the Goots model and some other action steps later that are very important to that point, surviving and thriving the transition until things settle down. Will, a couple of very important questions. As I understand it to be, in the traditional sense of the humdrum of the banking business over the years, they borrow money from each other, they, at certain rates, and keep each other afloat, the club, the banking club. now that's not working. It's almost every bank for themselves. So they go to the lender of last resort, that being the Fed window. So if the number is 51 billion, perhaps 90 days from now, it'll be 500 billion. I don't know, pick a number. Mike, I think as I put the dots together on this, if the Fed is digitally providing billions and billions of dollars as the modus operandi now to keep themselves afloat a little bit longer, that drives the value of the dollar down and creates inflationary pressure. Yes or no? Am I right on that point or not?
Well, technically, you would think that would be the case, that's what's going to happen. If you look at the Fed repo window and the amount of banks that are going to borrow money, it starts to look like the all-time levels we saw under the 08-09 crisis, right? Where you had everybody looking for a bailout somewhere because they were in a problem. When you had Lehman Brothers go out and Bear Stearns goes out, and it was catastrophic what was happening. So what we have right now is we have a situation where you have major players, Bank of America, Chase, Citibank. This week, Citibank is sitting on shorts of silver that could cost them $12 billion this week. What are they going to do? And Bank of America, another $4 billion. Okay. That's not, you don't just come up with that, right? You got to find it somewhere. And so it should be very concerning when you see these balance sheets going up with the Fed, because they're loaning out money at record levels.
Correct.
In a desperate attempt to try to cover somebody's bet, because that's what these derivatives are. They're all bets, right? They're playing the backroom bookie, and they now have to pay up. Okay, and that's the result.
Juan O'Savin,
go ahead.
Who I've interviewed Juan O'Savin relatively recently. Quick soundbite from Juan to this point you're making here about all this digital fiat coming in as a last attempt to save the central bank system. Juan said, we haven't had our near-death experience yet for the dollar itself. And I think that the mechanics of what we see taking place are contributing to that. I want to talk about Venezuela. Venezuela, you spoke about the silver there. Venezuela currently has, as I understand, over 300 billion barrels of crude oil reserves, which President Trump says the U.S. To some extent has a degree of control over. Oil prices are trading at about $55, $60 a barrel, making Venezuela's total reserves over $17 trillion. Even if the U.S. sells that oil at half of the market rate, that's $8.7 trillion. In other words, the U.S. has gained control, as I understand it, maybe it isn't exactly this way, of the oil reserves worth more than the entire GDP of all countries in the world, aside from the US and China. That's 4 times larger than the GDP of Japan. So, having stated that, coupled with the silver narrative concerning Venezuela that you opened up with, what impact, if any, do you see shaping up over this period of time uh, with this move with Venezuela that we just made? What impact do you see this having on the US and, for that matter, the global economies? We're talking about silver and oil. I mean, in massive quantities that is shifting.
There, there's numerous
any
things
views
that are
about that?
transpiring all simultaneously and all surrounding the Maduro situation. A lot of people don't understand what is so significant about Maduro, because it's not just drugs, it's not just oil, it's not just silver. There's a whole bunch of things.
Elections.
It's about
Yeah.
it's about Executive Order 13848. Okay?
Seizing the
About
assets. Seizing
corruption
the assets.
invading the electoral process of a nation to steal its government.
Yep.
And what you had going on in Venezuela is you had the birthplace and the exporter of vote stealing across the planet. Over 70 nations have had their government stolen through Smartmatic and Dominion systems,
Mm-hmm.
all exported out of Venezuela. Who do you think has the information on that? Maduro. He knows everybody that paid for it and everybody that was involved. This is why, a lot of people were saying, talking about Q drops, that Q says, well, the first arrest is going to shock the world. I think we just
Mhm.
had it. Because
have.
underlying everything with Venezuela is the disruption of 70 nations. And these are major nations. The United States, major nation, okay?
Yes.
Having its elections stolen. Canada, countries in Europe, Burma, and Myanmar, okay? This was being used everywhere. And it exposes Hammer and Scorecard. It exposes all of the corruption that's been going on with stealing votes. And that means that the
Yes.
legitimate governments everywhere could start collapsing because they are illegitimately placed there.
Correct.
The rest of Maduro was massive. Now, Venezuela has the largest oil reserves of any country in the world. I don't know if people understand this.
Mm-hmm.
305 billion barrels. As you said, 17 trillion value. Okay.
Mm-hmm.
So, under that executive order, the president has the right to seize the assets of the offenders. What do you think has just occurred? Just prior to that seizure,
That's right.
the silver got out of there. It made they had major freighter planes come in and was flying that out in the dead of night when the mine shut down. There's not going to be any more of that going on. Do you think the U.S. knew that was flying out of there? Of course it knew that. But there's a lot more happening. If China hadn't got that silver, if Russia hadn't got that silver, would they be ready for a financial reset? They would have been scary on the edge to be able to fund it.
Yep.
But now with this silver they've got, they may be in good shape. Okay,
Mhm.
in terms of
Great stuff.
backing a new currency. At the same time, you had
Yes.
countries like Iraq waiting on a revaluation, but not yet revaluing. You had
Mm-hmm.
podcasters, people like Phil Godlewski coming out saying the oil that was seized is for Iraq to back their reset. Possibly. I don't have information on that specifically, so I couldn't confirm. But it's interesting that you have stories going out saying that the seizure of assets in Venezuela, not only is it stopping all the vote fraud going on all over the world and exposing everybody that did it in all countries, but it's also financing the greatest reset that we've ever seen. This is an unbelievable
Absolutely.
move that happened in the last few days, and it will be months telling the full story of it. And I think it's going to be fascinating when we see names start being dropped. You've already had 60 senators' names be dropped
Yes.
by a person in Venezuela saying they were all on the take. Okay.
Mm-hmm.
These guys are probably
Julian
freaking out.
Assange told us 95% of Congress is going to be wiped away and guilty of something or another. And here's 60 right there. I want to mention Sidney Powell and Rudy Giuliani. You just spoke about Smartmatic and how the theft was done with the Dominion machines, and how 71 other countries, in addition to us, had their elections stolen. So listen, let's do a nice big shout out. And I didn't interview Rudy, but my American Media Periscope, another host did, but I did interview Sidney Powell. They were right. They're being vindicated and validated, and they should sue the pants off of whomever they should and get all the money back that bankrupted them. That's just a quick commentary. Let's talk about supply and
5 years
demand.
ago, they were
Just a
claiming,
bit.
hey, it was Venezuela. They told us, didn't they? They had it right. They said
Yes, they
Venezuela
did.
did this.
Sure. And
5 years ago.
Patrick Byrne, as of recent, I interviewed him on Conversations of Consequence, another show I have, and he broke news there. He said, I'm breaking this here. And later on, he went on to a series of shows with Emerald Robinson over at Lindell TV, and she did some great reporting on this. And I think they had a bounty on Byrne's life for $25 million or something for the work he did, going clandestine even deeper into this issue. So, look, it's out now. Owano Savin said that President Trump may potentially declare a national emergency pertaining to elections. We're not going to get our elections stolen again. I'll put that on the record right here and now. But I want to say this: supply and demand. We've talked a lot about silver. There's been a lot of forecasts out there. Some say silver will hit $100 this month. It's at almost 80. Forecasts for a little bit further down the line, I've seen in a lot of credible places, of silver hitting over $1,000 an ounce. Would you agree with this? And what are the contributing factors, in addition to the central bank backwardation event, that would catapult silver to such lofty levels?
Well, if you look at, if you just follow the inventory levels, you've got a couple things that are about to happen. Every spring, you have all the industrialized corporations that are using silver, particularly as an industrial metal, battery manufacturers, everything. They get their yearly inventories all queued up around March, April every year. They haven't yet done their yearly allocation of this. If they start demanding silver that's not available because nobody will sell it at any price, what happens to the price of silver? We could see $1,000, $1,100 an ounce silver. No problem could we see it that high. In fact, you might see gold's at $4,500 an ounce. What would you do if it was 10,000? And there's a lot of pressure being put. The reality is there's more gold than silver available. Okay. Silver is just a harder commodity to get a hold of because of the industrial demand. You're going to have a higher pressure there. So I do believe that in terms of push, in terms of escalation of price, these companies will have to pay whatever it costs them because they have no business if they don't. They will pay the price, whatever it is. And right now you have China that's just printed 48 trillion of Chinese yuan to do nothing but buy metals. So they're scooping up everything they get their hands on, and they don't care the price. You could say, "Oh, I want $95." Right. They'll pay it just to get it.
You go back to the Q drops, paraphrasing. Back in the day, gold will expose and bring down the Fed, and we have arrived, folks. That proverbial can that gets kicked down that road, there's not much road left. I want to switch gears. Show's moving along pretty quickly here. Crypto seems to be rebounding, had the big pullback. I know we've covered this a bit before, but there's still a lot of confusions out in the marketplace, and clarification for myself. Crypto seems to be rebounding. I'd like to briefly discuss XRP, which is now trading at about $2.25 or something. Is this like silver? Is it set to explode, XRP? And if so, why and to what levels?
it's gonna the why and what levels we're gonna watch and try to determine those numbers. It's a little hard for me to determine that right now. What I can tell you is CNBC had a special today talking specifically about XRP and how it's an absolute buy right now. I've never seen mainstream media come out and say this ever. And yet they came out today saying XRP is a great buy. What's happening is everything that is fiat currency related is under massive pressure because of the metals market. And so everything that is an alternative to that, which is things like crypto and other tokens, they're now getting a lift, the same as the metals are getting a lift, because it's an alternative to a broken system. You know, the Asian guy talked about how when you see the cracks in the dam, it's too late by that point, right? And yet that's what we're watching. We're watching cracks forming everywhere. How many fingers do you have to stick in cracks, right? You're running out of this. So what you're going to see is you're going to see everybody fleeing to safety. If they can't get metal, they're going to move to what they can get, and that is crypto. And so I see nothing but an upward push on various cryptos. Of course, I'm bullish on the ones that are actually compliant with the ISO specification. I think those have the best long-term stability because they're compliant. It's just my take on it. And not everybody agrees with me, and that's fine. But I do think that you're going to continue to see an upward pressure there, with XRP being used as an exchange medium between currencies. Its utility is going to be in super high demand. You have Bank of America that's been using XRP as an internal transfer mechanism for 2 years now. You think they're telling people this? No, they're moving from location to location within their own bank using XRP because it's cheaper than the bank system. And they've been doing it for 2+ years. But they don't talk about it. They want to keep that quiet, hush hush. But it's already being utilized in a greater way. And so I think you're going to see a bigger push. We had the head of the SEC just come out recently, and where Larry came out and talked about how everything was going to be tokenized, that he expected within 24 months, all of Wall Street tokenized. So if Wall Street's moving to blockchain for speed, efficiency, and instant settlement, what does that mean for tokens that are running on that system? I think it means a great future that's going to happen, particularly if we begin to see assets start backing stablecoins and assets start backing other tokens within that system. So if you start see additional tokens being issued that are backed by anything of value, metals, particularly gold, silver, those are going to do very, very well, obviously, because there's a digital mechanism to trade that. So I hope that helps a little bit.
It does. Thank you. Last question. We're going to bring on Bill Armour and then bring you back for a roundtable sort of discussion on these issues and other issues we'll raise. But my last question to you at the moment is, it's a simple question, and it's on the minds of a lot of people because all of this is new for us, and particularly folks more advanced in age are really having a tough time understanding this. You see a lot of narratives permeating out there on social media and with podcasters that basically say, hey, did you make the transition yet into the QFS? Are your assets in the new system and ready to go? Private message me. What are they talking about?
They're scamming people. There is no official capability to actually get a QFS or quantum financial system account. Anybody saying that they have it and that you can participate in it is scamming you, and they're getting your information, and it will hurt you if you give it up. So this is important for everybody to understand. When we get to a new currency, I'm talking about actual government issued. Let's say the Treasury decides tomorrow it's going to issue its own dollar backed by the assets of the country, gold and silver and oil in the ground. But if it backs a dollar with assets, you're going to be under a process of now converting your currency. And there will be a period of time when everybody will be able to convert out of fiat into the new system. Expect that period of time to be short. I'm probably thinking 90 days. But if you don't get exchanged during that period of time, best of luck to you, because you're not going to be swapping that at 1-to-1. You're going to be swapping it at whatever anybody will give you for that fiat, because it's going to die very fast. The moment anything asset backed comes out as a competition to the US dollar, that fiat dollar is going to collapse very fast.
Yes.
So I do think that it isn't a concern for most people. If you have a bank account now, if you have money in that bank account, it will be converted automatically, because if the country switches over, all banks switch over. So I don't think there's a concern for people, but please don't fall for the scams telling you they have some new thing that isn't out yet. Just don't do that, because it's really hurting a lot of people.
Thank you. And for the record, to our viewers, Juan O'Savin echoes the same exact sentiments as Will has just stated. Surprisingly, Juan raised that issue out of nowhere on my last interview with him, alerting to the scammers on the QFS, as well as precious metals companies through some of the podcasters. And Bill and I are going to discuss that a little bit later. Will, thanks a lot. You've got a great mind and great insights from your background and for your level of awareness of the systems and the world that we're now transitioning into. And you're a great asset to the show, and I appreciate it. If you wouldn't mind, just have a seat briefly in the digital green room, as it were. And we're going to bring on Bill Armour and then bring you back. Bill Armour has built a unique career combining vocational ministry and expertise in the precious metals industry, equipping him to bridge faith-based perspectives with practical wisdom in stewardship and in business. He's originally from Tucson, Arizona. Bill Armour spent 8 years serving in the U.S. Army Reserves. Thereafter, he went on to attend Azusa Pacific University, a Christian school in Southern California with a focus on Christian ministry and biblical studies. He's a precious metals expert and a director at Genesis Gold. Welcome back to the GFR, our good friend, Bill Armour.
Great to be here. Thanks for having me on again, John.
Good to see you. Thank you for being here. If you've been listening, we've unpacked quite a bit in the first segment with Will Barney. What are your views, and what can you tell us about what we see unfolding? Let's say off the heels of the Asian AI guy that we talked about, the mechanics of what's unfolding, everything Will and I just touched on, as it relates to silver. What's your weigh in on this?
Yeah, absolutely. So just as kind of a backstory for people that are hearing that and may not understand exactly, what we're talking about or the mechanics of this. So these banks overnight, they will run into liquidity crises as they're poised to enter the next day. So they have to have a certain amount of collateral or dollars on hand at any given time to meet those demands. So what will happen is the Fed will come in and will effectively issue money out of thin air in order to keep them solvent, right? So that's kind of the game that is played. And it's interesting. The video talked about, I believe, the Wednesday the Friday there, but actually December 31st had the record for the largest standing repo facility usage in history, United States history. So it's interesting. He talked about some other dates in there, but just as a point to make, this is not just a one-time event. We are seeing these standing repo facility usages at numbers we haven't seen since 2008, going through the housing market collapse there. So these overnight numbers, and that's something you don't see. You're never going to wake up, and turn on the news and it's going to talk about that. That's things that happen behind closed doors and are generally reported later on that this occurred, and everyone goes on assuming nothing happened. And the video, I think, did a great job of expressing the reality that these are not things that happen if everything is all right. You don't suddenly need to create money out of thin air if everything is fine. The plumbing is getting stressed. It's not going to show up in the news. First, it shows up in this kind of thing, and then later it shows up in the news. Now, obviously, silver is really the driving force behind that. And many of these banks are being forced to cover their silver positions. However, one thing I do want to point out that's really interesting as we talk about this is that as much as banks have covered their position, the fact that the Fed, and obviously we know which side the Fed is operating on, they're still fighting, but they're trying to keep a lot of these banks that have alternative interest. They don't have the American people's best interest at heart. So they're still trying to depress and suppress silver. So there is still a tremendous amount of silver short contracts outstanding. In fact, we're talking about 300 million notional ounces of silver outstanding in short positions. It represents, banks in particular represent almost half of all outstanding short positions, US banks, in fact, of all outstanding short positions on silver. So even though some banks are covering and some banks have covered, still systemically across the board, banks are hoping, praying that they can get silver to come back down through, aggressive silver shorting. So over and over again, they are being proven wrong. They're being proven wrong. They're being proven wrong. Because again, you can't argue with the logic that people actually need this. When we talk about gold, gold is a financial resource. If suddenly you couldn't get your hands on gold, that would be negative for your country, maybe, and different things. But it's not necessarily your economy wouldn't stop running if you didn't have the gold necessarily. Now, with the silver, though, it is the number one strategic asset here in terms of where we are heading in terms of development for our nation. You talk about any sort of data centers, you talk about any sort of technology, batteries, anything like that is going to use silver. So the problem is that they're betting against something that we need, that we keep having to withdraw and hoping that people will sort of see the light. Oh, it's not going up enough or this or that. The problem is it is, and their bluff continues to get called every step of the way. Silver will retreat a little bit, and then the bluff gets called. Oh, that's a deal. Silver's down $2. That's a heck of a deal. I'm going to buy that. And so you're seeing this over and over and over. The Fed produced here, and they're not calling it quantitative easing, but they produced the idea that they could issue another 200 billion of stimulus through reserve management, which is really just a fancy way to say quantitative easing. So the Fed is still actively trying, and I think on a larger picture, when you think about this and how viewers should imagine this, is that the Fed is still doing the absolute best it can in order to keep the current monetary system, the fiat system, alive. And the only way it can do that is it's kind of like a little kid that's caught in a lie. This is how I would explain it. In that initially they get caught in a small lie. And what do they do when they get called on that? They tell a bigger lie. And then what do they do when they get called? They tell a bigger lie. And so right now the Fed continues to tell big lie after big lie after big lie in defense of these banks that they support each other. It is a mutual relationship here between the banks and the Feds and the Fed. And so they don't want either one to fail because they both benefit massively from one another. So of course, across the board, that's what we're starting to see. We're seeing these, 67, 68,000 silver contracts, and each contract of silver is about 5,000 ounces. So again, roughly, 330 million silver ounces, notional silver ounces. But we don't have that. COMEX has 30 million ounces on hand, and a tremendous amount of that was just called forward. So if there's 300 million or some odd change silver contracts outstanding, and again, when you sell a short, which is what these banks have done, they are promising to sell silver at a price in the past. So that might be $40, $30. And so they have to go and acquire that silver at whatever the current price is. So if they have to suddenly scramble to produce 300 million ounces of silver, and COMEX says, yeah, we have about 4 million ounces of silver on hand right now, they have to go, they're going to have to go door knocking. But the answer is that they can't do that. That's not a realistic solution. The real reality of that, what that turns into, is you see bank failures. And it's no different in a lot of ways than 2008, where they bet and they traded and they collateralized, et cetera, with home loans. It's no different than that. It's just with silver this time. And the fact is they never planned on silver being really as great as it is, as wonderful of a metal as it is, and being as productive as it is. So what's going on with central banks, what's going on with regional national banks, is that they are the big lie is being called.
The Big Lie reminds me of the movie The Big Short, could also be called The Big Lie. And for those that don't like the Asian AI guy, go rent or buy or download or stream or whatever word you'd like to use, The Big Short. That kind of tells you what's happening today. And you're right, Bill, it is a big lie. It's just, they're just running out of time. You talked about, potentially $200 billion worth of digital fiat or being pumped in over this period of time to save their butts. That's not a solution. And it's all coming home to roost finally. I'd like to bring Will Barney back in. I have a few questions I'd like to for you gentlemen to weigh in on. We'll start with Bill, and then we'll go to Will to comment as well. Bill, discuss the importance. This is another interesting piece of the puzzle that needs to be understood by all of us. Discuss the importance of the silver to gold ratio in terms of how many ounces of silver it takes to buy 1 ounce of gold from a historical perspective, and where we're heading, and why this is such an important gauge for us to understand.
Yeah, absolutely. So the way I would explain the gold silver ratio, obviously it is the amount of ounces of silver it takes to equate to the value of 1 ounce of gold. And it's a very quick gauge to look at how expensive or inexpensive is gold relative to silver, silver relative to gold. And gold historically is the bloodhound that will lead the charge. It tends to sniff out when things are really wrong. So any sort of massive financial collision generally starts with gold going higher, because gold is the first one to call the lie, if you will. And then silver slowly, I say slowly, will generally wait a little bit, lag behind, and then it will shoot up and overshoot gold's performance. But historically, if you look in modern history, last 100 years or so, we generally talk about silver to gold in a ratio of about 35 to 1. Now, depending on the time scale you're talking about, because we could go back to biblical times when an ounce of silver was equated to about a day's wage for a man. And at that point, 1 ounce of silver was equitable to about 10 ounces of silver was equitable to about 1 ounce of gold. So depending on your time scale, you can look at that differently. But at least in the last 100 years or so, typically it's going to hang around 35 to 1. Obviously, right now, silver is roughly $80. Gold is roughly $4,500. So you can see that ratio is still is nowhere near 35, right? Now, the one thing I would add to that, though, is 100 years ago, for instance, or even in biblical times, silver did not have the industrial purpose that it has today. So if we look at the gap there and say that's a pretty substantial gap between what silver, the ratio of silver to gold, what it is now versus what it should be, and you say, man, that's great. What you would be missing entirely is the fact that we are going to have to fundamentally re-understand how much silver is relative to gold because of silver's newfound usage, industrial usage. It is now one of, if not the most important metals for a country to own, because your economy cannot grow in the modern world with technology without silver. And the problem, and I've mentioned this many times before, is we don't have enough silver. We're using more than we can produce. So if you are losing that supply, and you know as a fact that you need silver to grow your country in a technological way, then it becomes one of the most strategic elements for an economy. So that 35 to 1 that I referenced, in the last 100 years, I think that does not do nearly justice silver as what it should be today. Maybe it should be 15, maybe it should be 7, somewhere we can, we'll have to figure that out. Time will tell. But certainly what it was 100 years ago makes no sense, because we're using silver in a way we never did 100 years ago.
Yes, great analysis. Everything has changed, and there's a point I wanted to make there. I've lost it. Yeah, silver. Right. The AI and robotics and technology is the main fuel in silver, and I think, as was reported relatively recently, silver's such an important commodity, as you just stated, and the reasons why, which is why it's been placed on a rare minerals list.
Yep.
Supply and demand, boy, oh boy, economics 101. Will, what's your take on the gold to silver ratio?
Well, it's interesting. The president made a move within the last 6 weeks to make it a strategic metal for the country.
Yes.
Which is a very important move that was to put it at a place of prominence. What's interesting is, if you go back to the launch of our nation, go back to 1776, a day's wage was about an ounce of silver. Okay, when our country first started. Most recently, when we had this conversation nearly a month ago, the three of us, we were talking about this. The ratio was somewhere in the range of around 80 to 1. It's now at about 60 to 1 with the moves that silver has made, but that's still a long ways from 30 to 1, as Bill pointed out. Okay. Now, if you look at it, there's actually some practical points to make here. And the practical point is if you are a miner, if you're digging in the ground, for every ton of material you move, you might get 2 ounces if you've got a good deposit. Okay. A lot of the silver is coming as secondary. What I mean by that is it's coming from copper mines and from other where they're mining other minerals, and then they're getting some silver out as a secondary metal from their mining operations. But if you were to just go into business and you wanted to mine silver, $70 doesn't hardly even cover your bills to
Yeah.
dig it out of the ground. So it's massively undervalued. If you looked at the cost of inflation today versus 50 years ago, let's say 1980, okay? What does $50 do for you then versus $50 today? You need silver to be at $200 or you can't even begin to be in the mining business today with the price of inflation. It's not even valuable for you to even get in the business of pulling it out of the ground. So there's some real practicalities that you have to look at with this. And this is why we're headed into this wall, right? And the wall is there's only so much capacity and there's only so much available. And if the cost of getting that out of the ground is better than $80, let's say it's $80 to $100 getting out of the ground, you don't go into business to lose money. Therefore, you need silver to break 3 digits, right? So that you can then be viable in your business of pulling it out of the ground. So the interesting thing is a lot of the rich ore where we were getting somewhere between 3 to 5 ounces per ton of processed material. A lot of that processed material is old tailings. They were pulled out of mines 100 years ago and they're just sitting there. But we have advanced technology today that can take those tailings and turn them into something, right? And so now we get a second round at what was pulled out of the ground 100 years ago. What's interesting today is that now that we're getting through all the tailings, we're running out of rich deposits. So now we're having to do more work for fewer ounces, and the demand is insatiable. It's not coming down. So if you looked at it from a very realistic point of view and says, what does the price of silver need to be in order for us to even get it out of the ground and make it available to electric car companies and battery makers and everything else? They're going to want $300 silver, or they're not going to want to go into that business as a miner. So I'm just being realistic about it and saying, yeah, the price of silver at 77 bucks is a freaking bargain.
Yeah.
Because you
You're
can't
so
even get it
right.
out of the ground for that. And so even right now, buy, folks, if you can buy, it's a freaking bargain.
Yeah, I would even just
Yeah.
tack on there that you're because you're exactly right. The reality right now is that in order that you're dead on the money on the problem that exists. And this is why Trump had to put it on the strategic reserve mineral list, is because right now there is not enough. We have an above ground silver supply, and we are using more than we produce every year, and a good chunk more. And there is not enough incentive because silver is not high enough yet for people to go dig more. So at some point, there is a critical mass where companies say, we have to have silver. We cannot operate our business without silver. So what's the number? What do you need from us? Because we'll buy it at any price. And that's where you see silver, just go astronomically higher. But right now, there's this game of chicken of saying, well, we don't want to, it's kind of high. Maybe it'll come down. But at some point, they get caught with their pants down, if in a sense here, where they say, okay, well, we either decide we're just going to close up shop because we can't produce our products, we can't build electronics, or we decide to buy silver at whatever price it is. Maybe these electronics have to cost more, or this or that. It is what it is. But frankly, right now there's this almost game of chicken that's happening, and so the timing on that is running out, though, because at some point that above ground silver supply runs out, and it's a who's who. It's they're looking and say, hey, anyone have silver in their IRAs? We'll give you $300 for it. And that is the moment here where all of a sudden the power dynamic shifts so dramatically to the people that have silver will have the control of the power in that sense. because you can set your own price in a way because they won't be able to get it. It's not an overnight thing to just set up a silver mine. We're talking, years and years and years to get a mine, not necessarily that you can mine silver exclusively, and I can talk more about that, but just to say that it takes years and years and years to set up a mine. So it's not like we're talking about something that suddenly silver goes to 200. Okay, great, we're going to open 10 new mines and get the silver pumped out tomorrow. We're talking about silver goes to 200 and then mines start being developed to develop silver 5, 10, 15 years down the road. So these are issues that are going to come to a head, and I truly believe much sooner than people anticipate.
Well,
It's,
these next
you're
90
just,
days, as Will spoke about earlier, are
yeah.
very critical as contracts come due. And that's another component. And you each mentioned the importance for countries, corporations as well, but countries to have their silver, which is why China has locked the doors. They've locked the doors down on what they've got. Let's move into a different aspect of this. Could this down the line, we're talking about the price, how many ounces of silver to buy an ounce of gold at about 60 now, as Will just mentioned. Could this down the line, we'll start with Bill, lead to a ratio trade swapping? For those that have invested in silver, silver's ballooned up big, but at some point it pairs down to its near historical average, $40, let's say. Would it be a time to do a ratio trade strategy? Transferring some of one's holdings of silver, talking about individuals, to gold, and if so, what is the advantage of that?
Yeah, absolutely. I mean, you always want your best horse in the race. And so when we help people put together a portfolio, we put a portfolio together with the assumption that this is going to be something they hold for a considerable amount of time. So that's a thought. We want to get it right the first time. However, let's say all of a sudden, silver balloons up, three, four, five, $600 an ounce, and gold hasn't quite had that move yet. Absolutely, you may, I mean, and sooner than you might think, you may want to re-diversify some of the incredible profit that you developed in silver and repurpose that into gold. So it's not necessarily, I mean, it can be a set it and forget it, but absolutely you always want to put your best foot forward. So oftentimes we're looking all the time at what is silver doing, what is gold doing, and trying to pick what makes the most sense. Obviously that does pare down to different people and their different goals and whatnot, but absolutely you would
Mhm.
want the best portfolio at any given time. And luckily, that's why you've got people like myself and the team at Genesis who are looking at this all the time so that you don't have to pour through the data 24/7 to know, is gold overvalued, is silver overvalued, this and that. You can get great education here from people like us. They're going to say, this is an opportunity and something you may look at. So I would say absolutely to that.
While there's great dangers before us, and we've touched on the dangers before, and perhaps we'll come back to them later at some other time, but look at the opportunities. Listen to the information that Will and Bill are sharing with us in this episode. The opportunities are enormous. I mean, unprecedented what is happening right now. And to that point, I want to go to Will and we'll bounce back to Bill. What's up with platinum, palladium, and copper? Uh, these are commodities, platinum, all metals of sort. Why is platinum, palladium oftentimes not in the conversation, not in the mix, even though they've experienced a pretty decent growth last year? Um, what's the difference between investing in platinum? I'm talking about individuals in platinum, palladium versus gold and silver, and a commentary on copper. Will, if you want to share your views
Well,
on that.
there's a different purpose basically for these metals. So typically you're going to see platinum and palladium used a lot in the jewelry industry, but not necessarily in the industrial industry. Um, as you look at other metals like copper, nickel, we saw nickel, palladium, and several other things completely skyrocket at one point. And why do we see that
Mhm.
happen? For the very reason we're seeing silver move now. It was an inventory problem that preceded that, and it launched that into all new levels of money. A lot of people don't understand, if you start a mining project today, and Bill talked about this a little bit, the current and I'm talking about the US, so it could be a little bit better here than some other countries, but the current permitting process in the United States is going to take you 7 to 9 years to be operational. Now, that could change because now it's been made a strategic metal for the country. And so they may be able to fast track some of these permits to get something going. But if you decide that silver is tomorrow going to be 200 an ounce and it's now viable to pull it out of the ground, and you have 10 guys go out and say, we're starting mining projects. If you don't see that inventory until 2033, what do you do between now and then? You see the problem here. So
Yes.
we're looking at a physical delivery issue that can't even be ignored. The banks have tried to play a shell game, faking
Yes, they have.
inventory levels. That's why paper is at 3-to-1 versus physical silver and all of this. It's all a shell. It's the big lie, right? As we talked about. So as we get into what's happening going forward, and this affects all other metals, you're going to see copper continue to rise. You're going to see other metals because these are used in construction. How much is copper going into wires and piping and everything else? And we just had announced throughout 2025, nearly 20 trillion of new investments into the United States. Those are in factories. Those are in new construction operations to build out more capacity. And every one of those needs copper wire and copper piping and everything else that goes into that. And then you're going to need silver in the production of what you're making, right? So we're looking at a crunch in the near term. My opinion is there's going to be a tightening of inventories for many of these strategic metals in the near term until we kind of get past that wave. And, it could be 5 years, it could be 7 years, it's going to be some time. But as this continues to tighten, and you're going to reach a point where it just completely unhooks completely from banking. When silver hits a point where it doesn't matter what value you think it has, the value's only if you can get it. And it completely unhooks from that. That's when it begins to slingshot. And that slingshot could move it 10x. Now gold might go up 2x, but it's not going to do 10. But you could see silver slingshot. And when you hit that high point, that's probably when you're calling Bill going, hey, Bill, can you move me back to gold now? I've just rode this horse as long as I think I can. And he'll help you with those things, right? And you'll find a way to hold your upside. But the reality is, I don't see anything coming online anywhere in the near future that is solving this problem of inventory because it's just not there. And the demand is higher than ever. I know people, family members that have never talked about metals ever in their life, and now they're all talking about it. Right?
That's right.
So you got the everyday person going, I need to get some of this. And that even fuels the flames even hotter. So the next 90 days is going to be, I think, historic. And I don't know how high it's going to go, but could we see 200? Could we see 300? I think easily we see those numbers just because of the constrained inventory. Just my thoughts.
The perfect storm meets the big lie. That should be the name of this episode. And it's coming to a theater near you. And you raised a great point there, Will, among other points about, the average person who couldn't spell precious metals or wasn't even thinking about it ever in their lifetime are now having conversations at the grocery store online about it. And that is very, very good news. What I'd like to do to my producer, by the way, to our audience, Bill Armour and I are going to discuss in a few moments some of the critical things and warnings and red flags that Wanos haven't talked about. And Bill and I are going to get into the weeds on that very much in just a few moments to make sure that when you get out of the system, when you get off the tracks to survive and thrive this transition to or in the new system, that you don't get hurt and burned along the way. So stick around for that. I'd like my producer to please put up the image of Will Barney, the Patriot Q&A Hour. Will Barney, I want to thank you very much, Will, for taking time out of your schedule to do this for JMC Broadcasting. Quick announcement. visit jmcbroadcasting.com. We have a free subscription. All of our show content, of course, is delivered free to the public. And we have a newsletter and an audio report that I put out for free, candid audio report in your inbox every Friday for free subscribers. We also have just launched a Patriot Premium portal, which I'll talk about at the conclusion of today's show. One of the features in this is a Patriot Q&A hour where I'm a host and we bring on a guest to answer your questions for 1 hour in our private group. All of the questions will be answered, and we're going to lay out the mechanics of all that later. Sign up for free. You'll get some notifications. But mark your calendars if you're a premium member. All new Patriot Q&A live on camera. Will Barney and I, Thursday, January 29th at 8 p.m. Eastern, as you see on the screen. It's not a show like this. We're not scripted. We're not speeching. We're not to make up a word. We are simply there, namely the guest, the power guest, Will Barney, to answer your questions. A great opportunity. Visit jmcbroadcasting.com. Learn about the free subscription and the premium portal as well. So let's go back to just Will and I on the screen if we can. Will, I'd like to close out this broadcast to our producers. Yeah, there we go. Thank you, sir. If talk with us about Enoch Global Services, and we see the website up there. I know the website was launched relatively recently in the last month. What is it that you and your team are doing? Walk us through your passion, your work, your vision, and your mission, please.
Well, we're all about humanitarian projects. Everything that we do is focused about the fulfillment and the execution of humanitarian projects to help rebuild what we see as a broken world that needs some help. And we think we can be that help. So we have hundreds of projects of our own that we are doing, and this led us into a direction of we needed a way to manage this, and that has prompted what has ended up being our largest project to date, and that is that we're building a digital infrastructure, a private cloud system that's specifically for humanitarian projects, to bring all of the tools of modern technology, AI and otherwise, into the hands of humanitarians that are building out their projects to bless the world in some great way. And we're trying to bring that together in a way that is safe and secure. And we're using military grade digital encryption processes with this. It's usually something that's never been available to the average public of this level of that we're shooting for. And I'm very excited. We have some former military people that are working with us to build these systems out. They are incredible. We have technology that is easily 5 years ahead of anything that you think you know right now. And we're excited to be bringing this forward to empower humanitarians all over the world, whether you're getting money out of metals or the revaluation of currencies or whatever, but you're wanting to make an impact. We may be having software and data center tools that will make it possible for you to fulfill your goals and to keep you on track so that you stay in line with receiving the tranches for those projects so that they continue for many years in the future.
Incredible work. God bless you for that. And I'll tell you what, you and I have spoken before and we'll come back and revisit this in the future. In fact, a quick announcement. I've got retired Lieutenant Colonel Tom Lennox coming on to the GFR in a couple of weeks to discuss repatriation, to discuss the birth certificate, and many other issues. But Will, you and I have spoken before on this broadcast about the repatriation of wealth and the various different ways that we may see this playing out. So folks, God intended for us abundance and goodwill and prosperity, not scarcity. We know the forces that put us in slavery and scarcity. We've covered that. We're breaking out of that now. This is an incredible year, 2026. I peg it July forward as the dawning of the golden age. And to the point of your services at enochgs.com, Will, many of us have millions of dollars already assigned in our in our account. We'll call it that for now. From the trading of the birth certificate value, from the fraudulent activities and taxation that's been unconstitutional and illegal our entire lives. And there's some formulas, and we'll get into this with Colonel Lennox, where money is assigned to us. So we have Elon Musk talking about no need to save money in the near future. We have Elon Musk talking about down the road, no need to even have jobs or work. Now that requires some caveats and so forth. But my point in invoking this narrative as it relates to your work is we are going to be living in a world of abundance as intended. And we have to do good with that abundance. I'm going to talk about this in a future episode where I say we're reaching a time where God and science finally meet because of AI. AI is going to have some vibrational control mechanism, not just going to give you all this money. You got to be good. You got to be well intended. And many of us are going to be launching all kinds of humanitarian projects. I have my eyes on a few things I'd like to do here in Thailand to help children with education and different things. But the bottom line is your services. You went from a world of brick and mortar construction in part of your career, in addition to banking, and now you're taking those skill sets and you're building highways in a very, very sophisticated manner at such perfect timing. So I encourage everyone to learn more about EnochGS.com. Those that already have the abundance and are ready to launch your projects, look into this, and the rest of the world's going to be coming soon. Boy, you're going to be in the right place.
We want to bring
at
these
the right
tools
time.
to everyone. Yeah,
Go ahead.
we're starting in the United States because that's home for us. So we're the first systems will be available here. But if things go as planned, we hope to be in 100 countries in 10 to 15 years with the same systems and making it possible for every one of those countries to enjoy the launching of thousands of new companies and projects per year. So it'd be great.
Thank you, Will, for explaining all that to me and our audience. And this is exactly what capitalism is about. This is exactly what our free nation was designed for, to bring the best opportunity out for us to be creative and innovative, to make America and the world a better place. And this is really part of President Trump's mission all along. I mean, he's a great example of it in a different field. Now they're in American Bitcoin, so they're moving into the space. But anyway, it's great stuff. EnochGS.com. Will Barney, you're always a great guest here. I hope you can continue to join us once or twice a month, best of your ability throughout this year, because this is a critical year, and tapping your knowledge base is very important and valuable to our viewers. They tell us that. I want to report that back to you. So I want to thank you on behalf of everybody else. And again, folks, come visit us. Put that image back on the screen to my producer, please. I don't have the date in my head, so I need the image, but it's coming at the end of January. There it is, January 29th, 8 p.m. Eastern. You get to talk with Will. That's the sole purpose. 1 hour, and we will start exactly at 8, and we will end exactly at 9. Respect for everyone's time. And we'll walk you through the mechanics of how that works. Sign up for free. You'll start to get the notifications, and I'll be announcing it on the shows that we do. An opportunity for you to get your questions answered. You can see the broad scope of knowledge that Will has on many issues. So come join us. Thank you, Will Barney, very much for your time here on this particular broadcast. And we appreciate everything you do, and we'll see you in the near future. Thank you, sir.
So glad to be with you, John, and look forward to the 29th. Thanks, everybody. We'll see you next time.
Beautiful. Thank you. What I'd like to do is put up on the screen. Let me see where I'm going. Let's bring, there it is, the advisor scorecard. We're going to bring Bill Armour in a moment. He's going to talk about the dangers and pitfalls in investing in gold and silver. We've clearly have been, for anyone listening, inspired by this broadcast to come into gold and silver. And for those that don't have the capability to do that right now, you will later. Okay. Remember, wealth is coming to us all, and we're going to jump into that with retired Lieutenant Colonel Tom Lennox in a future broadcast coming up, I think, in next week or the week after. But anyway, I'm going to bring your attention to this. I'm looking at it on a screen over here where I can read it, but you see it on your screen. One of the obstacles we're going to have making the transition from old system into new is the old system players. Now, there are some good financial advisors, uh, but they may not be having these conversations. They may be well intended. Many of them aren't. They're part of the club. So here's a quick short list. I'm going to run through it fast. An advisor scorecard top 10 list that you should ask of your advisor if he or she is an obstacle to get you out of where you are across the minefield without any detonations, getting out of the system. Does your financial advisor have the same ideology and political views as you? Think that through. In today's world, that's important. Does your financial advisor understand and follow fiscal, monetary, and changing policy, or are they just looking at financial health reports and selling funds? 3, is your financial advisor in good standing with the regulatory bodies? Kind of a red flag there. You don't want to have a bad experience. Number 4, gold and silver, the best performing asset class in the world, with silver going up about 160% last year and gold probably close to 100%. Has your financial advisor, during this incredible boom, everything we've been learning on this GFR show from my guests, have they been discussing over this period of time the acquisition of physical, tangible gold and silver to combat inflation? Are they still doing the old model of 10 to 15 to 20%? Number 5, is your financial firm or advisor, I should say, or both, are they woke? Well, you know the saying, go woke, go broke. Is your advisor aware of the parallel economies and the global financial reset that is clearly underway? Do they have a strategy for this? Or is it the same old vanilla 23 different asset classes of stocks and bonds and other things in paper assets? We're wrapping this up and bring Bill on. Is your portfolio outpacing the current rate of inflation? Do they speak about following trends versus the diversification model? Because in 08, 09, when that collapse came, everyone that was diversified into 23 different asset classes, they were all sinking Titanics. The trend is your friend. Are they discussing that model with you? Chances are they're not. Do you have adequate liquidity for emergencies and opportunities? And those in retirement or preparing for retirement, the biggest concern is, will I have enough money to maintain the lifestyle I choose, factored in for inflation? Does your income plan provide a guaranteed income you can never outlive? Folks, you can download this document by visiting wealthcoachuniversity.com. It's viewable and downloadable there for you. Let's bring on Bill Armour. I just wanted to get that advisor scorecard out there because it's one of the obstacles that Bill and folks like Bill oftentimes run into when they're working with a client that says, "Hey, look, everything you guys are saying makes sense. I want to buy some gold and silver, but my advisor's playing tug of war with me." Well, run them past that litmus test. That should help you get the obstacle out of the way. Now, I talk about GOOTS, get out of the system. It's a model I worked in back in the debacle of 09, that wealth transfer, that collapse system. What we're embarking upon now is even bigger than that, but also good news. So there is a way to get out of the system, to get off the railroad tracks, and getting the financial advisor out of the way is your first thing. I'm not saying ignore them. I'm saying ask those questions of them, and then assemble the team that can help you be where you know you need to be. We're going to tap Bill's mind in just a moment. Juan O'Savin mentioned his concern for scammers in the QFS space. He also spoke about his concern of scammers, metals companies. I'm not going to name them here. As well, Juan mentioned podcasters he's not happy with that have metals companies that aren't passing Juan's litmus test, either overcharging or selling the wrong stuff. If I were on a different mission, I'd be calling all my podcaster friends and getting them up to speed. But I'm on a different mission and I'm laser focused, and that's why I have Bill Armour sitting here. So, Bill, what are some of the concerns? What are some of the pitfalls? What are some of the red flags that, without naming names, by the way, folks, I'm happy to name names one-on-one with you on a Zoom call. But right here publicly, we don't want to invoke a stack of lawsuits. But what we do want to say is there are some bad companies out there doing bad business. And there are some good companies out there. And you're looking at one of the top cream of the crop ones on the screen right now. Bill, what are some of the pitfalls on the metals side that investors need to be aware of?
Yeah, absolutely. I'll go in two tranches, that we'll talk about that. Obviously, there's probably a litany of things we could talk about, but the two tranches I'll talk about. First is obviously a company with a reputation. You want to make sure that that company has a stellar reputation, has been doing what they say they do, delivering the metals. So I mean, across the board, I mean that seems like an obvious one, but at the same time, so many people, there's so many actors out there, so many companies that you really want to just make sure you're doing at least your due diligence there. That's things like browsing reviews, checking BBB, because generally a company here that has issues, now they might say across the board, might say 5 stars because they have so many, but go over to the complaints side of things. Check those out and see if you notice a trend, which will bring me to the next side of this, which probably the most common pitfall I see across the entire metals industry would be overcharging. And what I mean by that, and how it's presented, and again, people can do whatever they want, they can make the decisions they want, but generally the people that we talk to, and the people that are listening to this show, do not come to precious metals saying, I really would like a collectible, limited mintage, gold coin. They only made 50 of. And if that sounds silly, it is silly, because you would never reasonably put your entire retirement in these limited mintage or proof coins or things like that. And yet, that is one of the most common tactics I see across the board from these metals companies, is they will convince people through a word salad that, no, the best thing you can do, don't worry about gold and silver, worry about this collectible coin. And then they will overcharge on that coin. The reason they can do that is because a lot of people, they're new to gold and silver. They've not done this before. So when this metals broker that they have to trust a little bit tells them that this coin is one of 10, and it's going to be worth so much more, and they say it's worth this tremendous exorbitant amount, and they have to just trust them. And a lot of times they do. And then they look back, and people will come to me, they'll call in and they'll say, Bill, can you take a look at this portfolio? It just doesn't really make sense to me. And I'll take a look. And of course, it's generally that. They have overcharged on these terms. Numismatic, it means collectible, but numismatic coins. And people don't understand what they bought. They weren't taught the differences there. They just kind of did what the person on the other end of the phone kind of instructed them to. And so I just tell people, look, you didn't come here to become a coin collector. You came here to get gold and silver because you understand its value, you understand what it's going to do. And so, and obviously, John talks about this as well. If you do his modules, I know that, and that's one of the reasons we get along. Is we both fundamentally understand where gold is going and silver is going, but also that people don't need this. I'll call it garbage. They don't need this garbage, and they certainly don't need to be overpaying dramatically for that garbage.
Yes. So what you want, folks, unless you're a collectible and want to overpay for something that you may or may never get your money back for, or you
Yeah.
just like it on a shelf and want to pass it as an heirloom, well, by all means do so. But most of the folks following the GFR program, we're looking to do what? Hedge against the declining dollar and take advantage of the massive bull market. And that's not even the right term. It's beyond that for gold and
Yeah.
silver as a way to hedge against inflation, hedge against the dollar until it gets rebounded, and to balloon your portfolio through the roof. And it's liquid. So you're looking for bullion. That's what you're looking for. You're not looking for, as Bill mentioned, these semi-numismatics. Again, unless you want to pass it on as an heirloom because it's a shiny coin in a little plastic box. All right, so let's talk briefly, Bill, about paper versus tangible.
Mhm.
One of the obstacles that you're going to run into, folks, and talking to our audience, first, again, go through the advisor scorecard. It's just really what you need is the first step. But the broker's going to say, well, you know what, we sell that, and we have a turnkey program. It's in an ETF. It's this SLV GLD fund. It's mining shares. It's a paper proxy. What are the problems with that, especially
Yeah.
right now with all we've been discussing?
Yeah. I think that, and I've always told people the issues with paper gold and silver, but it's nice to have these current examples to point to of exactly why I have warned people against paper gold and silver for so long. And that is that in the same way that we were talking earlier about COMEX and the outstanding paper shares, is that's not physical gold and silver. It is the promise that that institution will trade. It could be a couple things. I mean, there's a Frankenstein, a litany of options there, but ultimately is one of a few things. It's either a conglomeration of silver trading funds, so not actual physical silver, but silver trading or traders, and then gold or silver mining stocks, a bunch of adjacent things to that. Or it could be something like, and this is maybe the most insidious of them all, because the broker will say, yes, you do have physical silver, is they will have something like, and I won't mention specific tickers or anything like that, but they will have an ETF or whatnot that is backed by silver. So it has some silver behind it or gold. However, you can't actually redeem that. Redemptions are either limited entirely, they are limited to a portion. So, for instance, I was looking over one the other day, and redemptions were limited to 10,000 silver ounces at a time, and you had to take them in 1,000-ounce silver bars. And redemptions were available only if the silver was in stock at that moment, at that time. So, the point I always drive home to people is, if you have something that you can only get when everyone wants it, what do you actually have? Because if all of a sudden
Correct.
everyone says, "Oh, I want my physical silver," guess what? You're not you won't be the only one to have that thought. Everyone around you will also have that thought. At which point you will have nothing more than a paper promise. And the issue, to extend that even farther, is that if that, silver ETF or what have you is in over their head, as many of them are, then eventually you run into the problem of, again, potentially even going defunct. I mean, and I don't want to scare people, but I do want to point out that it is a completely different animal owning paper, gold, and silver. Now, have you had profit in paper, gold, and silver? Absolutely. But one of the main reasons you go to silver is not just to make money, it is protection. And you're giving up all of that protection and not getting anything in return, except maybe staying with your broker. So unless your broker is worth losing all of that protection, then you really have to investigate what that means, paper, gold, and silver versus physical. I talk to so many people that are adamant. They say, no, I do have gold and silver. I have it with this. And they say, no, it's actual physical gold and silver. And I mean, I've done this long enough to know, well, I'm saying they don't offer that. I mean, I can tell you beyond a shadow of a doubt. And eventually, obviously, you can send them an article or whatnot about the particular fund they're in. And they're always so shocked. In fact, I mean, I just had one person that I spoke to the other day that over $1 million in gold and silver, but it's all in paper. And at the beginning of the conversation, they just wanted to have a quick chat and say, I just wanted you to look this over. I've already got gold and silver. And I said, oh, what do you have? How many ounces? And they said, well, I don't have ounces. Or maybe I do. I'm not really sure. And immediately it's, well, how do you not know how many ounces you have, or if you have ounces or not? Because so, and of course we dug into that, and she would, this poor woman was just floored by this. But I see this so often. That is one of the things that I see across the board. So be very aware that if you've got gold and silver with one of the big name brokerage houses, you probably don't have gold and silver.
Absolutely. Great information, folks. I hope you're taking notes. Those that are coming newly into gold and silver that haven't made moves on the paper side, well, now you won't go there. Those that already have, perhaps it's time to unwind. What if you're looking for a physical, tangible metal for the reasons we've outlined on the broadcast? Why would you have all these vias? By the way, there's also fees associated with the paper proxy.
Yeah.
So you've got these extra layers of fees that are ongoing. Add that up over years. You don't have liquidity issues, especially when there's a run on it, which is probably going to happen. So great point there. I want to talk very briefly about GOOTS, get out of the system. Consists of primarily 5-bucket approach. Cash, got to have cash to pay the bills, cash for emergencies and opportunities, but cash used to be king, but cash is trash right now, and so are banks. So what do you do with it? We explore that as bucket number 1. Cash and bank and bond alternatives. Why a bond alternative? Because as Juan has told us, the bond market's beginning to implode, particularly municipal bonds. So you've got bucket 1 in GOOTS is getting out of the system, right? Coming aboard where the light is shining in the dawning of the golden age, right? We've laid that down in the last hour and a half with my 2 guests. So bucket 1 is cash, bank, and bond alternatives. We explore that one-on-one, private, if I meet with you as a wealth coach. You can bypass me, get straight to Bill Armour. He knows quite a bit as well, and certainly knows a lot more than I do in the metals world. But bucket two is income producing assets. People need income in retirement. Um, Bonds are typically the stabilizer in a stock portfolio to trigger um, uh, interest or dividends, depending on what you're owning. And but the bond market's in trouble. So, what are alternative income producing assets where you can get a guaranteed income you can't outlive? That's a second bucket. Third bucket is crypto. We touched on that with Will Barney. The type of cryptos you'd want to look into, and all the ones that you don't, and the reasons why. Important for some capital, because what's happening now, it's the AOL moment of our time. 30, 40 years ago, whatever it was, AOL, I wish I would have bought it, right? Well, those that did, own mansions all over the world today. Okay, crypto, one of the buckets. Next bucket is preparedness. While it's not a financial bucket, it's a get out of the system. We have to prepare in the event of a lockdown, the event of an EBS issue, the event of disruptions to services and goods. We talk about preparedness and A, B, C levels. And then the most important, critically important financial component of the Goots model is, of course, precious metals, gold and silver, bullion. And that's where Genesis and Bill come in. You can be fast tracked to Bill Armour for a private one-on-one consult with Bill. There's no fee for the consult. He will answer your questions. He will analyze your situation, and he will help you get across that line. He'll help you to get out of the system. He is the resource I use. I have a resource network available to the public. Bill is my resource in gold and silver. And so you can call him. The number's been on the screen the entire time, 1-800-200-4653. This is very important, folks. This is a wonderful time, a huge opportunity. Now, I understand I spent much of my younger adult years just trying to buy lunch, trying to pay the rent before I was even able to get a mortgage. Okay. I come from the school of hard knocks. I've been to the top, I've been to the bottom. And I can tell you, I understand those that don't have assets to protect just yet, but you will. From the things I said before, from all the money that's been stolen from us, from all that repatriation of wealth, from the president talking about the elimination of the federal income tax by IRS, the elimination and transfer of the Federal Reserve duties over to the Treasury, the birth certificate money, the stolen wealth, the fraudulent stuff. You have money and it's coming to you. So get the education on gold and silver now, because you'll want some of it later. But for those of us that have been fortunate, blessed, and have accumulated wealth, got to get out of the system. The system doesn't care about you. The system doesn't care about you. The system is going to take you down to Chinatown, as Robert De Niro once said in a movie. And I shouldn't have invoked his name because he's on the shit list as far as I'm concerned. But that's a different conversation for a different day. Great actor. Don't care for his outlandish statements against this president and good things. But anyway, hopefully De Niro's folks don't sue me. But anyway, what I want to do, Bill, to close out, I took us off track here a little bit. Close us out. Talk with what the experience is like when someone contacts you through finding you through me and my network. What will they experience when they reach out to you?
Yeah, absolutely. I just as you were saying that, one of the things I think about is I wish the people that are thinking about calling could talk to people that have already gone through the process and done that, because what they would tell you, and because I just had a long consult today, is that this is about making sure that you have confidence in what you're doing, understanding that it makes sense to you. My job is not to walk in and get people to do this, or anything like that. My job is to explain. I often think of myself almost like I work in a courtroom, and I am putting the market and the system on in court here, and I'm putting it on the stand, and I'm just pointing out. And it's up to you to be the jury here, and it's not up to me to tell you the verdict you have to make, but certainly to unpack and diagnose what is going on, how this affects you, and what you might do to protect yourself. So you're going to get. You would call in. you would speak with me directly. You're not going to, you might speak with someone in the interim that would just schedule you with me if I'm not available, obviously, but you're going to speak directly with the person that you've seen on this program the entire time. And that's a commitment I have to John, that anyone that comes through him, I personally handle. So you're going to speak directly with me. We're going to look at your situation. We're going to identify how exactly you're set up, what some substantial steps you could make in order to protect yourself. Probably the same things that John's talked about today. We're going to help you set up a type of account, either if this is a qualified or a non-qualified purchase. If it's a non-qualified purchase, that just means that it's not in an IRA or a 401k or something adjacent to those, in which case we're going to help you with a wire transfer. We're going to deliver metals either directly to your doorstep, completely insured, safe, very, very anonymous. So it's going to be a great setup there. We insure it in transit, or put that in a depository on your behalf. If you say, Bill, I just don't feel comfortable storing some or all of my metals at home, we'll help you with depository storage. On the other hand, this might be an IRA, it might be a 401k, it might be something like that, in which case we would help set up a type of account. It's a special type of account that allows for the ownership of physical gold and silver. Again, this type of account is the only one that will do it. It's called a self-directed IRA, not to be confused with a self-managed IRA or a select IRA. These other things that brokers will offer that sound very, very similar to this type of account. And they'll tell them you do have gold and silver because you have a select IRA or this or that. No, it's a self-directed IRA. They're held exclusively by trust custodians, the only type of account that will allow for the ownership of physical gold and silver. We would help you set up one of those accounts. We would help rotate the funds from the current IRA to that new self-directed IRA. That is a penalty-free, tax-free event. So you're not going to pick up fees. You're not going to pick up penalties, nothing of the sort. It's A for A, B for B, moving from one IRA to another. Once it gets to that new account, then you're going to have access to purchase physical gold and silver. And we would break down splits in gold and silver. So that's what percent in gold, what percent silver, depending on your situation. We would talk about coins versus bars, and we would even talk about denomination sizing. So you can go and get a 1,000-ounce silver bar, but you might say, Bill, I want something that I could barter with or utilize in that way. You might want 1 ounce silver. You might even want fractional silver. Certainly you might want fractional gold. But on the other hand, and that's the things we talk about, is everyone's different. Everyone has different goals. Some people do end up with 100-ounce silver or 1,000-ounce silver bars. Some people end up with 1 ounce silver pieces. There is no one size fits all. And that's where this relationship, this consultative approach is so helpful and so beneficial.
Thank you very much, Bill. And a quick comment on 401ks. For those that don't know much about me, you can visit jamescbroadcasting.com, click on my name halfway through the nav bar, and my biography is there. And part of my biography included nearly 15 years as a successful financial advisor with 6 independent offices in 3 states. And so, I know what goes on the other side. And now, of course, I'm over here jumping into the new world that we're in from top to bottom with my military intelligence and economic panels. But what I'm getting at is the 401ks, just because, a lot of folks may have tuned out and said, well, I can't get my money out of the 401k. Not necessarily true. I know a lot about this. I know all the questions you need to ask of your plan administrator, and you may or may not be, but chances are you will be eligible for some portion of a rollover of vested money out of your 401k, even if you're still employed and even if you're under 59 and a half. So not always the case, but believe me, between Bill and I on this screen, and I'm not tooting our horns, you have great access to people with a lot of knowledge and experience, and whatever I don't know, I know who to go to who does know. So take advantage of the free consult with Bill. These aren't sales pitches, folks. These are tremendous opportunities, as where we go one, we go all. This is our time. We've spent plenty of time talking about all the horrors we've been through with the pandemic and all the issues at the border and everything else that we've been put through. But you know what? There's light at the end of the tunnel. And that light is starting to shine, and it can shine brighter once you come aboard. So I encourage you to take advantage of that. I want to close out with this, folks. I'm all about action. While this show, the GFR, is economic focused only, my other programming is on the other aspects of the war with military and intelligence folks. But in this broadcast, money is very important. In my opinion, President Trump has 3 legacies he's going to leave behind. One is restoring sound money. It's a big deal. Two, restoring election integrity, not only here, but throughout the world, and the sound money throughout the world over time. And three, of course, probably number one, is rescuing the children and rehabilitating them and making damn sure it never, ever happens again. So the money is a big deal. That's why I have this dedicated program. I believe me, I got, I have a lot on my plate, but I launched this show last year for the purpose to answer the call. And I bring on people like Bill Armour and Will Barney and many other great guests, Rob Cunningham coming back, John Dowling coming back, great guests that give us the knowledge that we need. But knowledge is power. I get it. But applied knowledge is wisdom. I'm all about action. That's why I dedicate a portion of this show. So here's your action steps. If you've got all the data you need, good. Give Bill a call and buy your gold and silver. If you need some help, go to the free educational 10 modules I put 100 hours of my time into at wealthcoachuniversity.com and get more education. Those that want access to me as a private personal wealth coach, I don't sell investments, insurance, or metals. I don't manage money for a fee. I don't give specific investment advice, but I will act as a very high level, straightforward narrative wealth coach for you. I can only do 8 appointments a month, and that's stretching it for me. But I'm doing this right now because it's a calling. It's our time. So those that want the extra help, those that have a lot going on, you can access me through wealthcoachuniversity.com. There's a mechanism for you to secure time with me. Go through the Goots model. Let's put on my analysis hat on, provide the wealth coaching, and introduce you to my resource network, Bill being the key one on the Goots model in gold and silver. I've got crypto resources and others. So that's really it. Show's been about 90 minutes, so actually about 2 hours, but chock full of great information. Thanks to you, Bill Armour and Will Barney. We're going to sign us off now. Thank you, Bill. Bill returns every other week because he's quite busy. So you'll come and see Bill 2 weeks from now on this broadcast, but give him a call, 1-800-200-4653. Great time to be alive. Great time to be buying both gold and silver. I want to thank you, Bill Armour, for your expertise and for your commitment to serving those that follow me on my broadcast by serving them so well as you do. I thank you on behalf of them and on behalf of myself. So thank you all very much. And I'll be right back after this important announcement.
The global financial reset is happening right now. The opportunities through this transition remain for some time to come. Don't miss this unprecedented moment in history. But caution, identify the dangers through this transition and prevent fatal mistakes by being ill-advised or uninformed. Schedule your private wealth coach consult with John Michael Chambers on a Zoom screen meeting. The ability to meet with JMC is very limited. Learn more by visiting wealthcoachuniversity.com. Once prepared, schedule your consult with JMC. It's time to seize the opportunities and to Goots. Yes, Goots. Get out of the system. QFS, stablecoin, the US dollar, gold and silver, Fed IRS changes, income needs. Your personal situation will be addressed. It's time. This is a wealth coach consulting appointment for those with questions and/or assets to protect. John is not a financial advisor and does not give specific investment advice, nor does he sell any investments, insurance, or precious metals. Gain private access to John and his resource network. Schedule your consult today. wealthcoachuniversity.com.
All right, we see here, thank you if you're still here, thank you for sticking around. A couple of quick announcements and we'll wrap up the broadcast. You're looking at the homepage of jmcbroadcasting.com and there's a lot of good information on this site. That homepage is updated hourly on the Pulse of the Nation. The daily briefs are updated daily, and we're not going to scroll down or anything, but there's current broadcasting there. You can see subscribe for free up top on the very top, and then you have the premium. Let's go to the free screen, if you will, to my producer. When you subscribe for free at JMC Broadcasting, you will receive a copy of my 5-star rated book, Trump and the Resurrection of America, but you'll also receive our newsletter every Friday by 7 p.m. Eastern in your inbox. It also includes an audio update from me, kind of a candid, straightforward audio narrative of what we've been through that week. and some other benefits. So visit JMC Broadcasting. Those that want to subscribe for free for our notifications and our newsletter and the audio report, there's a mechanism with which to do that. Let's put up the premium. I think there's a premium. There it is. Those that want to go the extra mile for $9.99 a month, there's a little video you can click. When you click on premium, you can watch that video. It describes it a little bit more. Patriot Q&A Hour is every month. We're launching the premiere with Will Barney. Maybe next month after will be Juan O'Savin. Maybe the next month will be Michael Jaco. All the guests that you see on my show and some others that maybe not guests, these will be the people that you will be able to talk to once a month as one of the many benefits as a premium member, which also includes JMC Unplugged. It's typically an hour and 90-minute long full detail of me unplugged in ways you don't hear me on the air here, covering a lot of good information. So consider the premium portal. We could also use your support. Helps fuel the engine at JMC Broadcasting. If you like our professionalism, you like our delivery, you like our consistency, you like our content, you like our guests, put your money where your mouth is. It's only $9.99 a month, and we could use your support. So that's really about it. I'd like to put up the promo image one last time. Will Barney, January 29th, 8 p.m. Eastern. You got to be a premium member to access this, so come consider it. And we'll be making formal announcements of how this will play out. That's really it, folks. Long show, great show, good information. Things are changing. Welcome to 2026. We got dangers ahead, near-death experience on the streets. We see a lot of chaos unfolding right now, and it's going to escalate. We also see told the near-death experience for the dollar coming, and we won't skirt over these. We've delved into it a lot last year. We will be revisiting these on Eyes on Gitmo panel with Juan O'Savin and others, and we'll be visiting this on the Global Defense War military panel. So anyway, thank you all very much. Thanks to my producers for sticking around for 2 hours with us here today. Thank Will Barney and Bill Armour, and thank you for following, sharing, and liking our broadcast. John Michael Chambers speaking with his voice, signing off. We'll see you next Wednesday live at the Global Financial Reset. Stay safe, and may God be with you.